What's going on YouTube? Welcome back to another vlog. I do your boy Chris. If you're new to the channel, welcome to the channel. If you're not new, welcome back to another vlog. Today, you saw in the title, we're going to be talking about Forex trading for beginners, the 5 steps that you need to take to be able to be, I'd say, a profitable beginner trader and be on the right way to a profitable career in the market. And please, before any of you comment below, comment on any of the other videos, or DM me on Instagram, do not ask me to recommend a broker. I will make a vlog dedicated to that, but please, I've had probably well over like 1,500 to 2,000 messages about brokers. Let's all be patient and wait until I make that vlog. It'll be worth it. It'll be worth the wait. So until then, please be patient on that topic. So let's get into it. Number 1, first and foremost, is understanding candlesticks. They seem pretty simple. They are pretty simple, but they're also complex in their own way. There's different candlestick formations which represent different things. They represent obviously the different directions. So like the first thing that you would want to know about candlesticks, I'm not gonna give you information on all 5 tips, but I will give you some on candlesticks. For the other 4 steps, you'll have to go and do research and learn about it and study it based on knowledge that's on the internet or however else you decide that you learn it. But candlesticks, the first 4 things to know are open, high, low, close. So there's going to be 4 different prices. If it's a bullish candle, it's going to open at the bottom and close at the top. If it's a bearish candle, it's going to open at the top and close at the bottom. Meaning, so on a candlestick, there is usually 2 points, one on the top, one on the bottom. Those are called wicks. Then there's the actual body of the candle, which is the colored part, whatever color you have it on your chart. Mine are black and white. So if you go back to my vlog, not this past Saturday, the Saturday before, you'll see my chart that there's the candles that have the wicks, the 2 like straight lines on the top and the bottom of the candle, and then there's the body of the actual candle. So if it's a bullish candle, the bottom is the open, the top is the close. The top wick, the highest point of the top wick, is classified as the high, and the lowest part of the bottom wick is classified as the low, vice versa. If it's a bearish candle, if it is a bearish candle, you're looking at the open at the top of the body, the close at the bottom of the body. The bottom of the bottom wick is the low, and the top of the top wick again is the high. Just like on a bullish candle, there's so many different candlestick formations. There is hammers, inverted hammers, engulfing candles, railroad track. There's so many different candle formations, doji candles that show reversals or indecision, so on and so forth. And they all have different, like there's hammer, inverted hammer, there's a hanging man which looks similar to a hammer, but it's in a different context on the chart. The hanging man is similar to the hammer and inverted hammer. Sorry, it's similar to the hammer, not the inverted hammer. But it's in a different context. It's usually near the top of a trend, which shows a reversal to the downside. A hammer shows a reversal to the upside, depending on the context, if it's at the bottom of the chart, so on and so forth. So that is definitely number 1 that you want to know. That's the first tip to becoming a beginner trader, I would say, is understanding candlesticks, understanding the context of the different candlestick formations that there is, so on and so forth. Number 2 is understanding pips, what a pip is, how to calculate a pip on the different pairs that there is, on gold, on Euro USD, on USD JAPI. Number 2 is pips, which is point and percentage. Again, you want to know for any pair that you pretty much trade, you want to know which decimal place or which decimal place on the price is valued at 1 pip. How do you do that? Again, you're going to have to research that on the internet. That's up to you. Number 3 is going to be trading sessions. Trading sessions are super important because different trading sessions bring different volatility. So the New York session, which obviously is the New York Stock Exchange, is going to be more volatile than the Asian session, right? Which is the Asian Stock Exchange, stuff like that, the Asian market opening up. There is moves during the Asian market, but it's obviously going to be in pairs that are relevant to that market, right? Like you're not going to have GBP USD making a big move during the Asian session. simply because it's not a relevant market to that pair, right? So like New York session, you would be trading pairs that have to do with the US dollar. London session, you'd be trading pairs that have to do with like the British pound, the euro, stuff like that, that it's relevant to the London market, right? And that market over there that's opening up. And the sessions do overlap, so while the London session is open, the New York session opens up, and then shortly after the New York session opens, the London closes. And then while the New York session is open, Australian session starts and New York session ends, and then the Asian session starts, Australian session ends, and then London session starts, Asian session ends, so on and so forth. So they're always overlapping each other, which is why the foreign exchange market, Forex, is open 24 hours, 5 days a week. For that exact reason, is because the markets are always overlapping each other. So it gives you the ability to trade from Sunday at 5 p.m. Eastern Standard Time to Friday at 4:59 p.m. Eastern Standard Time. So that's number 3. Number 4 is understanding support and resistance, understanding the different time frames and the strength that those support and resistance levels bring. Obviously, the higher the time frame, the stronger the support and resistance level is going to be, and the more relevant it's going to be on the chart. So a weekly support and resistance level is going to be a lot stronger than a 5-minute, obviously, right? It doesn't mean that the 5 minutes not relevant, but it's going to be relevant to the context that you're reading the chart in and applying it in. So the higher the time frame, the stronger the support and resistance level is, and the stronger of a confirmation that it's going to essentially be with whatever you're trading, whether it's support, resistance, and whatever you're using it. If you're using it for prices above it and you're waiting for it to bounce off of it and buy it off the support, or a price broke support and you're waiting for it to come back and retest resistance to take a sell position, whatever it is, you have to understand how to use those, when to use those, and the different contexts to use them in. The 5th one is correlations. Correlations are super important. It can give you somewhat of an edge as to what's going to happen. Say for instance the US dollar is going down, most likely gold is going to head bullish because gold is valued in the US dollar, right? So if the dollar is going down, gold is going to be going up. If USD Japi is going down, gold is going to be going up most likely. The Japanese yen is positively correlated with gold. They're both similarly looked at as safe havens. Obviously gold more than the yen, so that's that, but they are positively correlated, which is why because the yen is at the end of USD Japi, for example, that's why when USD Japi is going down, gold is going up, because the yen and gold are positively correlated. But USD Japi, the US dollar versus the yen against gold, are negatively correlated, which is why USD Japi goes up, gold goes down, USD Japi goes up, vice versa. There's websites that have charts that show you correlations with pairs, so that's something to also research. Number 6 that I want to drop and give you guys the knowledge on. Number 6 is going to be understanding news. You definitely need to understand how news, not even actual trading news events, there is trading news events like FOMC, CPI, which is the Consumer Price Index. You have retail sales, NFP. There's a whole bunch of major news events that you can research and learn about what they are. But when I talk about news, I'm also talking about what's going on in politics and what's happening around the world, because that will dictate what is happening in the markets. So you need to be aware and understand what is happening in the world in correlation with what you're trading. So if there's something that happens between the US and the Middle East, for example, that's the first thing that pops into my head because of the stuff that happened towards the end of last year. It pushed gold up, right? It started the bullish run for gold because there's uncertainty in the market, there's uncertainty in the economy around the world. Gold is a safe haven. People take their money out of currencies and they start injecting it into gold because it's a safe haven and it's a safer place to have your money, as opposed to in any currency which could collapse because of anything that happens based on politics or somebody doing something dumb to another country or whatever the case is. So you definitely have to stay informed and up to date as to what's happening with economies and politics that are involved with what you're trading. Not so much as to like someone speaking or something like that, even though that does have an effect, but just keeping up to date, making sure you're paying attention to what's happening in the actual economies overall that are relevant for whatever you're trading. But I hope that those 6 tips give the beginners and maybe even the people that have some sort of experience some extra knowledge and inspiration to keep learning and bettering themselves in the market. On that note, like always, please hit the like button, smash subscribe, turn on your bell notifications, that way you get notified for the next vlog this week. And I will see you soon in a few days. Peace out.